Hi, my name's Jonathan, and I want to bring you guys into my trading journey. So I've been trading for about a year or so, and I just started making these videos just to show you guys my process and my the things that I learned, so you guys won't repeat the same mistakes that I did in trading. So let's just get straight to it. So in this first ever trade, so I want to tell you guys something. This trade is the first ever trade that I made on a funded challenge. So so this will be my first ever funded challenge account, and yeah, I'll just bring you guys into this journey that I'm into, and just to see if I really do get the funded to really get funded or not. So yeah, the funded account that I got, it was the $50,000 one, and I bought it from Alpha Capital. It was about 297 US dollars. So yeah, and in the first ever trade I took, it was a loss, and it was not a big loss. It was just $45. And I tried to keep it that way because trying to keep yourself in a smaller position will eventually help you in gaining confidence, especially if you're like new traders and you don't really know what to look for or what to do. So trading a smaller position, and if you're like if you made a mistake, and if you like did like wrong analysis, it won't really affect you as much if you did like a big position. So yeah, every time before I trade, I would always look into what's happening around the market. So the first thing that I would look into will be the macroeconomic news, and like, what are the things that might affect the certain ticker that you'd be trading today. So I'm gonna be trading. So I was trading NAS 100 futures today, and so I was just looking at any news providers and news articles that might affect the price movement for today. And I found this article that's been saying that hedge funds have been shorting the VIX for about 59,000 contracts for the past 16 weeks. And what this means is that I know that the market volatility index is pretty low, and that might indicate the price to go higher because, like, VIX usually reflects on the investors' fears. And another article that I was looking at is that investors was still on the positive side of the market, and they just kept on trying to buy the dip. But one thing to keep in note is that there was too many investors that were trying to buy the dips, and any loss of confidence in the group might put the whole market at risk, since they have been buying tech stocks like Nvidia, Apple, and Tesla, and any loss in confidence in that might might affect the NAS 100 or the S&P 500 and stuff like that. So let's just go straight to the second thing that I will be looking at during pre-market session, and that will be a technical analysis. So in this technical analysis, I will always look for areas where market always bounce from or reject from. So what I meant by that is this: I was just looking at the supply zone or the demand zone. As you can see here, this was a pretty heavy supply zone, as when price went up here and got rejected, but then went up here again. Although it made a small high here, but it didn't really go long, like it didn't really last long. So it just went down again and went up again and just got rejected again. So I assume that this was a pretty heavy supply zone, and the purpose of drawing these boxes is just to see whether or not when price goes back to that zone, which one will be more active. Either sellers will continue selling this area, or buyers will step in and like drive the price higher. So yeah, that was just the things that I would look for in the zone. So that's why I marked the zones. And let's just go straight to the market open. And as the market opens, price sold off, went down to the second demand zone that I marked on the charts. And yeah, so on this first ever trade on this funded challenge that I took, it was a pretty big mistake, as I was just trading on a public holiday and I didn't know that. So while I was analyzing the volume of this price movement, I saw like the price was declining, and I assumed that as when the price went higher and the volume was declining, I assumed that there was low market participation. That means there's no interest in the higher levels. So I assumed that the price will go lower. But when I checked at the cumulative volume delta, or the buying and selling pressures, I didn't really like show any divergence or like difference between the movements. So I took a hit on my stop loss, as that volume decline was just because of a public holiday. All right, moving on to Wednesday. Wednesday was the second day that I took a trade on this funded challenge. And again, in the first trade, I took another loss, but this was just like a small loss. I only risked about $60, but I got stopped out. I think it was about $17. And yeah, let's just go straight to the pre-market analysis. Again, I was looking at the news just to see what's going on in the market, just to keep myself aware of what's been going on. And I was just looking at, like Trump, that imposes like 25% tariffs on like 3 new sectors. Initial jobless claims, just the key events for the week that might affect the certain index if you're trading. Like if you're trading Chinese stocks, you might be wanting to look at geopolitics or like, news about China and stuff like that. Or if you're looking at Forex, for example, there's more things that you might want to look at if you're trading Forex or crypto and stuff like that. But yeah, just try to keep yourself aware of what's going on. And if you don't know, you can ask ChatGPT. So during pre-market, market opens up with a gap up here. And that shows some strong demand in this area. But as price was moving up, it broke through that demand and it retested, got rejected. But then I saw like a pretty heavy supply zone over here, about 22,180 until 22,200-ish, right? And for the demand zone, I saw a pretty strong demand, just about 22,130-ish. So that's for the pre-market session. Let's move on to the market open. For the market open, my initial plan was just to wait for the open, because I was just looking at this demand and price was pretty supported by the demand. But then I saw a rejection in the first 10 minutes of 9 a.m. So I was like, just not sure about what's going to happen. So I was just waiting for it to, show me what's going to happen, like what's going on. And then I took a look after the market open. I was just waiting. And then I saw this in my volume indicator. So the purpose of this indicator is just to indicate if market participants are interested in a certain price movement. So in this case, when price moves higher, I saw a decline on the volume. This indicates that there was lower and lower market participants, or lower interest in the higher price levels. So you can assume that when price goes higher, there was really no buyers interested in buying the price at that level. And I checked at I took a look at my cumulative volume delta indicator. So this tells me that how strong the buying or the selling pressure is. And as you can see here, there was a difference between the price and the delta. So when the price declines and the delta made a higher high, this shows a strong buying pressure, but it was not reflected in the same way as the price would be reflected. So if you have a lot of buyers, but then the price eventually goes down, that means those buyers are not as rewarded. So those buyers are not as respected. So that's why when you see like a strong buying pressure on the delta, but then the price closed lower, you can safely assume that either there were more sellers, or the buyers are not respected, or there were just some stop losses of buy orders. So yeah. And I took a look at the footprint chart, and what I saw here is just the same thing with what I saw on the volume indicator. So when the price went higher and higher, you can see here the volume was declining and dying over time. So at 9:49, you can see here, for example, it was like 1,300 transactions, and the next minute it was only 1,004. The next minute was also 1,004, but in the next minute there was like I think 3 minutes gap. They went from 1,300 to 900, and then boom, there's only 872. So I can safely assume that there was low market participants, no buyers being respected, and you can safely take a short. But what happened here and why I took a loss is that my stop loss was way too tight. So this was the first lesson that I learned, and I should have learned this from the past year of trading, but I just kept on making the same mistake. So yeah, hopefully you guys learned the same from the mistake that I did. And on the second trade, I basically took the same trading idea as this was just a few minutes gap between the first and the second one. And as you can see here, I placed my stop loss a bit too tight again, and I just got stopped out when the price wicked higher, got stopped out there. And this kind of caused me some FOMO, because I was right in my analysis, but then I took a loss, and it was just like, a terrible feeling if that happens. Yeah. Because when you're right, but then you're not rewarded, so it's just a terrible feeling to happen to you. But then for the third trade, I took the same idea again as from my first and second trade, and it took me just a couple of minutes just to score profit. It was a quick one, just quick grab and go for like the next 2-3 minutes. I learned from my lesson, kept my stop loss just a bit high enough for the price to actually move around. So yeah, so I was just risking about $68, and I made about $130, you could say. It was like about almost twice the amount of the money that I risked. Moving on to fourth trade. In the fourth trade, I tried to catch the bottom. So when I saw some demand here, and I was just trying to catch the upward movement before it retraces back to the supply zone and goes down lower. But what I didn't see was that there was some continuation in the demand, and as you can see, when price moved higher and higher, the volume kind of like stayed consistent and those aggressive sellers that were present in the market wasn't really as rewarded anymore or as respected anymore. And as the price moves lower, the price closes higher than where most sellers were. So that indicates a signal for a reversal or like a shift in the market sentiment. And from that, I learned the market demand has just shifted. So from being stopped out when the price moves higher, I got a little bit FOMO. And this fifth trade was just a small mistake that I had, and that I got stopped out because I wasn't really buying in the strong level or like a strong demand zone. That's why when price showed some demand here, it got quickly wiped out. So moving on to the sixth trade of the day, I think. Sixth trade of the day, as soon as I got stopped out, I waited for the price to reach the previous demand zone over here. But then I quickly switched sides because I was getting FOMO when I tried to catch the move downward. But what I didn't see was that the demand was getting stronger and stronger. And as you can see at 10:21, there was only about 79 buyers and 53 sellers. It was pretty much most transactions were happening around these levels. But as when price went higher, the suppliers were trying to drop the price lower. And as the next minute, that was like 10:23, I believe. Yeah, 10:23 opens, and price tried to retest these levels and see if the demands were still there. And it was there. It was really present. And so I can safely assume that the market sentiment has just really shifted, and it really signaled a pretty strong reversal for me. So when price moved lower, you can see here, although there were about 800 transactions happening around here and there's only 600, but price closed higher than the previous closing price. So when mistake, fix, 1 2 3 go. So when price moved lower here, as you can see, there was only 668 transactions happening. This can signal that the market participants were not really interested anymore at these price level. So it went higher, and when it closes higher than the previous one, where there was more sellers around here at 10:22, that really made me like, oh, buyers were more active this time and they really want to drive the price higher. So from that assumption, I went long, and I've put my stop loss here just in case if my analysis are wrong, because in the market you can never know what will happen, and every move that you take, every choice that you make in trading, it will just be another probability. So it will never be 100%, because you never know if buyers here will keep on buying the price and driving it higher or not. In some cases, it might happen is that when price reaches here, sellers came back in and started driving the price lower. So that's why in trading you should have an edge, and by having an edge means that you know when you're wrong, and when you're wrong, you'll try your best to cut your losses, because if you can't accept that you're wrong, those losses can put you in a bigger drawdown. So that's not what you really want in your trading journey, because that can really affect your psychology and your confidence in the next trades. So that's why it is important to keep an eye on your stop loss and your emotions. As you can see here, I checked at the cumulative volume delta, and just to see whether or not those selling pressures really got absorbed or not. And as you can see here, when price moved lower with the really strong selling pressure, it got rejected and closes just a bit higher than the previous swing low. This gave me the signal that, those sellers wasn't really as rewarded anymore or as respected anymore than the previous minutes. Minutes. And yeah. Although my executions was pretty good, my management was pretty bad. As you can see here, I entered here, right? And my original take profit was here. So what happened was, when this candle closes, it showed me like this, big rejection over here, and that really got me scared, and I just closed my position. And as soon as I closed my position, the candle jumped higher to where my original take profit was. And this kind of things will happen, and you can't really control it. So when this happened to me, I got FOMO. Like, obviously I could have made double the amount of the money that I was making. So I only made like $61 and I was risking about 56. It was barely a break even of what I was risking. Although the entry was really good, but when the trading management was bad, it just would really affect your psychology. And when this happened, this is where you want to stop or size down, because once this happened to you, you will continue to look at false signals like that you create in your own head, and that is just a bad habit. Because if you are trading in FOMO or in fear of missing out those big gains or big money, that would make you think, this is a pretty good opportunity, and I'll just jump in with a big size and make that money that I was supposed to make, right? And if you expect that, then you will get chopped up by the market movement, because the second you do that, you will lose your edge, and by losing your edge, you really don't know where you'll be wrong or you'll be right. And that's just a bad practice if you do that in trading. And for the next day, this will be Thursday. Again, first trade of the day, another loss. This was a pretty big loss. I was initially risking about $40 and I was losing, and I took a loss about $121, so 3 times the amount of money that I was initially planning to lose on that day. Again, so the reason why I highlighted this is that every time when the stock market has a lot of uncertainties, that sometimes brings the fear out of big investors. And when those big investors are scared, they tend to run to gold. And that's why I highlighted this, as gold usually becomes the safe haven for investors when a lot of uncertain things are happening in the market, like inflation, geopolitics, and stuff similar things. So let's just go straight to the technical analysis. And as you can see here, there was a pretty big supply in this area, pretty strong demand as well. So I was just waiting when the price moved towards this level or this level. All right, let's take a look at the small time frame. As you can see, there's another demand here, but it's not really as respected as this demand, so I might not trade on this zone. let's just go straight to the technical analysis. And I was just looking at the volume indicator, and I saw when price moved higher, the volume was declining. You know, same stuff as yesterday or the past 2 days. But what's different this time is that I saw sellers was exhausted. So when you see this, right, in the cumulative volume delta, or the buying or selling pressure indicator, is that when price created a lower low, but then the delta created a higher low. What that tells me is that the sellers were exhausted. So what I mean by that is that when you have a lot of sellers selling, when you have a smaller amount of sellers starting to sell at a certain price level, like these ones, that means they are not as interested anymore, because they might be in a demand zone, like a strong demand zone, and those buyers will starting to pop in and try to reverse the price higher. And that was my assumption. So from that, I just took a trade. Didn't really pay much attention, but I got stopped out. So this is what I've been saying in trading, right? There's no really 100% strategy, right? And every choices that you make will only end up in a probability. There will always be a small chance that you'll make a mistake. It's up to you whether or not you want to take the bigger chance of failure or the smaller chance of failure. That's why back testing plays a key role in this trading journey, right? Like this FOMO, and when price showed me like a setup that I always trade, like a strategy that I always trade with. As you can see, I always trade when I see some buyers getting rejected, sellers starting popping back in, and this was a pretty good entry, to be honest. And what happened here was that I scaled in. So from losing that $120, I wanted to make more money, right? I wanted to end the day with profit. By having that kind of mindset, it kind of like gave me the urge to take a bigger risk to make bigger profits. So this was the first trade, was a pretty good entry. I was making about $200, I think, or I don't know, maybe $150 to $200, right? And when price kind of like find a demand in this area, I took another trade. So I kind of like scaled in, and I was just hoping that sellers will continue selling when prices went up here, right? But what I didn't see was that I was too blinded with just trying to make huge profits, and I didn't see that these sellers were not as respected anymore as what I used to do, right? As you can see here, there's only 35 buyers here, and there was about 104 sellers, but price closes just above here. But when it goes lower, right, those buyers that were in these levels, they increased, like they popped back in and kept on supporting the prices, right? As you can see here, there was like 136, 130, and 109 buyers, right? And when price went lower again to retest these buyers again, more buyers started to come back in at a lower price, and that fueled those price movement to go higher. And when it retested again, the same demand zone, sellers came back in. And when sellers came back in, it failed to get respected. When you have a lot of sellers trying to drop the price lower than the previous area where most transactions happen, right? Price is most valuable to buyers and sellers, right? And when you have a lot of sellers popping back in, trying to close below that specific value area, and they failed, which they obviously did here, that gave me a signal that, oh, the sentiment has just changed. That means more buyers are starting to pop back in and demand the price to go higher, or the sellers were exhausted in just selling and like getting absorbed, getting unrewarded. And because I was blinded to make a bigger profit, or trying to make it big on that day, I ignored those signals, and from making about $400 in total, right, because I was making 200 on one trade, and I was making about $50 or like $70. It was about $300 to $400, sorry, right? And once the price started to go against me, I kind of couldn't accept the fact that it happened, right? I couldn't accept the fact that the market sentiment has just changed. So when that happened to me, I was in a drawdown of like $190, about $200, right? And I decided to cut those losses, because if I did not cut my losses, I would have lost so much more, right? I cut my loss about like 150-ish. So that was a pretty painful lesson for me to learn, is to accept the fact that I was wrong and try my best to adapt to the changing situations. That will be our hardest job as a trader. So from that mistake, I kind of went into a FOMO. So I switched sides. This was kind of a lucky trade, to be honest, because price moved quite fast. And yeah, so what I learned from my previous mistake is that I wasn't trailing my stop loss, because I was kind of too happy to, a bit too greedy. I got a bit too greedy of making like $200 and $300 at the trade, and I was like a bit happy that I would make my money back that I lost in the first trade that day, and I wasn't trailing my stop loss. So the purpose of trailing your stop loss is that just in case if price goes against you in a certain level, when you get stopped out, at least you make some profit, you know what I mean? So how do you trail the stop loss? If you were to ask me how to do that, is that when price moves, they tend to fluctuate, right? And when they fluctuate, they usually have some supplies over here, and then when they do have some supplies, it kind of retested the previous demand, and see whether or not those buyers are still interested at these levels, right? And if they're not, it will go lower, and if they are still interested, it will definitely go higher, right? And what happened here is that I saw price fluctuates because there was more suppliers coming in at 10.18, and it's got more aggressive here, but the price, those sellers failed to close the price lower than these levels where most transactions happened, means that there were more buyers starting to pop back in that absorbed those sellers' effort to drop the price lower, right? So when that does happen, it means there is a bigger chance of price going higher. But there's a small chance that price might go lower, and you'll never know, right? So that's the purpose of trailing a stop loss. If you have a stop loss here and price goes lower here, or like closes lower, you know that you are wrong and sellers came in to drop the price lower. So that's the purpose of trading a stop loss. And yeah, so I exited my trade here just because I saw a pretty strong sellers here, and this time they got rewarded, and the buyers wasn't really as respected anymore because they closed just below this area where most transactions happen, and more sellers starting to pop in, and they got more and more aggressive. And as you can see here on the next minute, they're about 185 and 117, 127. So basically the market sentiment has just changed again. This is what you want to look for in trading, and you should always expect that these things will happen, and you should adapt to them, right? And yeah, so I took another trade after waiting a few minutes, like 1, 2, 3, about 10 minutes. I think I was just waiting, and I saw an opportunity here, but what happened was I got stopped out. This time I know I was wrong because I saw some buyers getting disrespected here, but I thought the price would go higher and higher, but these sellers was getting stronger and stronger at the lower levels. And when sellers were getting stronger at a lower price levels, that means you want to expect that price will go lower and lower. It also means that there's more supplies and demands than demands. So as you can see at 10:33, this is the confirmation that I should exit my trade and accept that I was wrong and cut my losses, and end of story. So yeah, I also forgot. So when you already make a big amount of money, or when you already lost either you make or lost quite a big money, you should size down. I don't know. That's what I learned in the past year of trading. So when let's say I make a pretty big profit, let's say I make $1,000 in profit, right, in one trade, I would always get greedy or too confident. So if I trade after making that $1,000, I would sometimes ignore the small signals, or the signals that I should be wrong, or the signals that the trade might go against me, and that usually caught me up in a bigger drawdown and would wipe out my $1,000 profit, right? So that's why every time, when I lose, let's say lose $1,000, right? It's big money. And when I lose $1,000, I would always want to make that back at least, right? I don't want to lose $1,000 in one day, right? And when you do that, you kind of get impatient, and you try to risk more in trying to make that $1,000 faster, right? And so when you make or lose a big amount of money, you should always size down. And by sizing down means you cut down your risk, and by cutting down your risk, it will help you think clearer, and by thinking clearer, you will make less mistakes. So that's what I learned in the past year of trading. So that's what I did here after I make not that big. It was 200, but it's pretty big at that time. So I cut my position size in half. So basically in simpler terms, I cut my risk in half. So if I would be trading at a 5 lot size, I would lose about 44, and this time I only lost about $22. So yeah, so this time, this was the final trade of the day, and this was a pretty good trade, to be honest. After that small loss, it helped me think clearly and see where the price, and kind of like read the price action and where does it want to go, like where does it really want to go. So as you can see here, suppliers, like, they are pretty consistent in these areas, and when price moves higher from 1037 to 1039, these volumes were slowly decreasing, right? As you can see there, at 1037 we had about 1200 transactions happening, right? And the next minute it was only 1000, and the next minute is only like 1008, right? So it's like kind of like getting smaller and smaller in market participants, right? And when that does happen, you can safely assume that those market participants are not interested in transacting at a higher price level. So if you do see that happen, you can enter a trade here and put your stop loss just above here, just in case there were strong demands here. But I want to play it safe because I see pretty strong demand over here, so I just want to like see these demands get invalidated, basically. Like, basically I want to be 100% sure that these demands are not valid anymore, or like sellers have gone lower to sell at a lower price, right? So I just waited till 10:43, and at 10:43 you can see here there was about 68 buyers, and at these levels there's only about 38. But then if you see the sellers, if you take a look at the sellers, it was about 21 and about 45 and 61, and the amount of sellers are increasing over time, and the price kept on closing below where most transactions happen in the previous minutes, right? And this is what you want to see if you want to go short. So I took a short here, put my stop loss just above here where these buyers got rejected or disrespected, right? And as you can see here, I trailed my stop loss again because price will always fluctuate, and when it does fluctuate and when it does go against you, you can at least make a portion of what you're making. And yeah, so I trailed my stop loss here, and you may ask why. It's because when price closes at 10:45, there's pretty strong demand over here, and I don't really want to see price closes just above here. So if let's say price closes above 10:45 candle, that means there's a higher probability that the buyers are starting to come back into the market, right? So I don't really want to see that. So that's why I put my stop loss there. And at 10:47, when price retraced back here, I put my trailing stop loss just here. And yeah, and at 10:48, my third trailing stop loss is just above here when price closes at 10:48. Yeah, and my final trailing stop loss was just here when price closes at 10:49. So yeah, if you do trail your stop loss, at least when price goes against you, you at least make a portion of your P&L, and that really helps your psychology. And yeah, so The reason why I put my take profit just here is because I saw some pretty strong demand zone over here, and I thought price will go higher, and I don't really want to see that. So I just place my take profit here just because I want to play it safe. And yeah, it was a pretty nice trade. It was about 8 RR, so I was risking only about $18 and I was making like $150. Now obviously if I sized up or like played with a bigger size, I would make a lot more money with this risk to reward ratio, but I just wanted to keep it safe. And what's more important is that in the end of the day is that I profited and I made those money back. So yeah, I think that's all for this week's trade recap. And yeah, so I'll go back with the key takeaways for this weekly trade recap. Takeaway: always be patient. Whether you're losing or winning, always be patient and stay to your edge. Second takeaway is always put a trailing stop loss, right? Because you always want to make a portion of what you're making, right? And the third one, don't size up too fast, because by sizing up too fast, that means you're exposing yourself to more risk, and by doing that, you can get into a bigger drawdown, because in the market there's a lot of uncertain things that are happening, and you don't really want that. Alright, and that's the key takeaway for this weekly trade recap, and I'll see you next week. Thank you.